It's a great time to be a part of the natural products industry. Data from the 2014 Whole Foods Magazine Retailer Survey show that the industry added more than $5 billion in sales last year, with supernaturals and compact grocers leading the way. Welcome to the 2014 Whole Foods Magazine Retailer Survey podcast. I'm Paige Lazar, your moderator for this presentation. If you're looking for detailed information about natural product sales, keep listening. For a brief overview of the highlights, check out our companion presentation, 5 Findings in 5 Minutes, at WholeFoodsMagazine.com/multimedia. This in-depth presentation will cover the state of natural products independent retailing based on the Whole Foods Magazine Annual Retailer Survey. Today's discussion will cover the survey methodology, info about the participants, annual sales data, foot traffic, gross and net profit, and expenditures like rent and inventory. Our presenters are Kaylin Chiarello-Ebner, editor and associate publisher of Whole Foods Magazine, and Jay Jacobowitz, merchandising editor at Whole Foods Magazine and founder and president of Retail Insights. So let's jump right in with some background on the survey. Kaylin, how did you collect the data?
As we've been doing for 37 years, Whole Foods Magazine surveyed independent natural products retail stores about their sales and profits from the previous year. Stores were contacted by email and fax in July and were asked to tell us about their sales and profits in the prior 12 months. The complete analysis was published in the December issue of Whole Foods Magazine. You can read it online at WholeFoodsMagazine.com.
Who were the participants?
Independent stores from all across the U.S. 30% of the participants were West Coast stores. 22% were from the East, and the other half were from the Rocky Mountains, Midwest, and South. We had pretty even participation across all markets, from major metropolitan areas to large towns. The largest showing was from medium cities or suburbs. That was about 27% of our participants. Stores averaged 24 years in business, of which 19 were under the current owner. While a few stores had some online sales, the vast majority were brick-and-mortar sales. All told, this year's survey participants represented over $900 million in gross sales and nearly 1.5 million square feet in gross lease area. But it's important to note that our numbers are only independent stores, and they don't represent the total size of the natural products industry. For that analysis, we again worked with Retail Insights to give you the 2015 retail universe for premium, natural, organic food, supplements, and personal care sales. Jay will tell you more about that a little later.
Can you tell us about the sales volume from the independent natural product stores?
Sure, but first let's talk about how the numbers are organized. Throughout our analysis, we grouped stores by the percentage of perishable foods it sold. Whole Foods Magazine believes that a store is defined by its perishable offerings, those being refrigerated foods, frozen goods, fresh produce, and food service offerings like a juice bar, prepared sandwiches, and to-go meals. Perishables are magnets for drawing shoppers several times a month, if not weekly or even several times a week. In the end, perishable sales are often linked to traffic, store size, sales, and profit. Stores listening to this podcast should look at the results based on the total percentage of perishable sales that are most similar to yours. This will help you gauge your store's sales and profits against other stores like yours. So here are the sales numbers you asked about. Average annual sales for independents were $2.6 million per store, but this varied a lot by perishables percentage. Take a look at Figure 2. The perishables heavy stores averaged well over $13 million in annual sales per store, while the supplements heavy stores, with the lightest perishables and fewer than 5 locations, had the least at over $576,000. You can see an almost linear relationship between the store's perishable sales and its overall sales. As perishables increase, so do total store sales. The exception to this is stores selling 10 to 19% perishables. Their sales were less than the supplements chain, whose numbers were higher, even though their percentage of perishables were lower. Now check out where the average for all stores falls. It's right here, toward the top of our chart, at $2.64 million. But think about this. The median sales figure for all stores, meaning half of all stores were higher and half were lower, was just over $950,000, well under the average of $2.6 million.
How did you account for store size in all of this?
We collected some great data about sales per square foot. One stat that I thought was really interesting was that annual sales by square foot were up by 41% this year. But first, let's break down the store sizes a bit, and then we'll circle back to this. The average gross lease area, or GLA, for all stores was just over 4,300 square feet this year, and their selling space averaged nearly 3,300 square feet. The store's footprints varied quite a bit when we grouped businesses by perishable sales. In a nutshell, the larger the perishable sales, the larger the store and its overall sales. This trend held for all groups, except for the light perishable stores with 10 to 19% of their sales from perishables. They had smaller stores than the large supplement chain stores. Now, looking at sales by retail square foot, the average was $801 per retailing square foot, and the average gross lease area per square foot was $611. Both were up this year by 41%. This figure indicates some very efficient independent stores that are competing with smaller footprints, where great customer service can make a huge difference. Sales by retailing square foot were higher than average for larger perishable stores. In fact, the largest perishables groups had more than double the average, with over $1,600 per retailing square foot. Overall sales per square foot declined as the amount of perishables sales declined.
Wow, it seems perishables really do drive sales. But as stores sell fewer perishables, don't they sell more supplements? Jay, could you tell us more about this?
Yes, that's right. Chart B gives us a vivid picture of the difference between perishables heavy stores and supplements heavy stores. While stores that sell a lot of perishables, which you can see on the left-hand side of your chart in blue, can and do still sell a lot of supplements. Stores that sell mostly supplements, on the right-hand side of the chart in red, sell almost zero perishables. As stores try to add more perishables and become a food store, it isn't until they reach about 35% or more of their sales from fresh foods that they become a true food-focused store. As we'll see in the next few charts and tables, this middle ground, from 10% perishables to 34% perishables, is a tricky area, where stores don't typically offer enough fresh foods to capture the most customers per day or dollars per customer. Figure 2 shows us the huge gap in annual sales once stores make the leap above 35% perishables. Stores that sold from 20% to 34% perishables averaged about $2.5 million per year, while stores that sold 35% to 54% jumped up to $6.2 million per year, a 250% increase, adding $3.8 million in sales. Think about this for a moment. It's like opening 1.5 new stores that sell 20 to 34% perishables, except that you're doing it all inside of a single building. How do stores accomplish this? Take a look at figure 3. Here we see that average transaction per customer stays the same, slightly or just below $30, all the way from the lightest perishable stores up through 34% perishables. But once we cross the 35% threshold, bang! Average transactions per customer jump to nearly $38, fully 35% higher than the $27.92 average transaction in the stores with 20 to 34% perishables. Notice, too, that stores in these two middle perishables groups, from 10% perishables to 34% perishables, actually have a lower average transaction per customer, under $30, compared to the more compact supplements-focused stores that sell almost zero perishables, which capture just over $30 per customer. This is a telltale sign of the struggles stores have as they try to add some, but not quite enough, perishables to their offerings. To round out our analysis and bring home our point about being a truly food-focused store, take a look at the average number of customers per day. You'll see that stores that offer 35 to 54% perishables capture nearly double the number of customers per day compared to the 20 to 34% perishables group, increasing to 480 customers per day from 245 customers per day. Couple this with the larger $38 average transaction, you can now see why making the leap to a food-focused store is so powerful.
So, how can a 10 to 19% perishables store be successful?
My advice to these stores, if they insist on offering some perishables, is to pick a product category they are best at, say prepared foods, and focus on that category. Remember, the 10 to 19% perishable stores were only 2,200 square feet on average. This is just too small to offer a convincing selection of all the perishables categories. As you can see from Figure 3, these stores don't get many more customers per day than supplement-focused stores, just 97 shoppers compared to 90 for the supplement chains.
We've been talking about sales. Now what about profit, Kaylin?
The average gross profit margin for all stores was about the same as last year, 37.7%. That was over $994,000 in annual profits for all stores. Gross profit margin correlated closely with perishable sales, peaking at 41% in the 0 to 9% perishable stores and drifting downward to 34.6% in the 35 to 54% group. The one exception to this was the 55+% perishables group. These largest stores, remember they averaged $13.9 million in sales, apparently were able, through their superior buying power, to achieve an average gross profit margin of 38.6%. Average net profit for all stores was more than $116,000, which was about 4.4% of all sales. Once again, net profit dollars and percentages tracked closely with the percentage of perishables a store sold. For the percentage of net profits, we found an inverse linear relationship. It peaked at 8.38% of sales for stores selling the least perishables, that's 0 to 9%. And it declined to 2.62% of sales for stores selling the most perishables, over 55%. But even though the percentage of profits declined as stores sold more perishables, remember, their total dollars were climbing. So we saw dollar profits grow as perishable sales increased, from a low of just over $48,000 net profit in supplements-focused stores to over $364,000 in net profit for stores selling the most perishables. The one exception to this was, again, our 10 to 19% perishables group, which at $65,616 in net profits fell below supplement chain stores. These stores clocked in at $75,646 in net profits. So this indicator is yet another telltale sign of the hazards of selling some, but not quite enough, foods to attract a daily shopper.
How did sales go by product category?
Total perishable sales for all store was nearly 41% of overall sales average, accounting for more than $1 million per store on average. But there was a huge range, with perishable sales for supplements-focused stores in the 20,000s and the 55+% group at $8.5 million. Let's look at top-selling perishables categories for each group. Follow the path of prepared foods from left to right, and you can see that the highest percentages of prepared food sales are associated with the stores that sell the most perishables. That's also true of produce. This is more evidence that daily shoppers are bumping up sales in the larger grocers. The 10 to 19% perishable stores, speaking to Jay's point, attribute only 1.4% of their sales to prepared foods and 1.2% to produce. Refrigerated and frozen foods are their top perishables foods, perhaps serving the needs of bi-weekly or monthly stock-ups for a supplement shopper that picks up some frozen gluten-free bread while they're grabbing their probiotics from the fridge. Sales from all perishables categories are about level across the board for the 20 to 34% group. Overall, for all stores in the survey, the largest category was perishables, which averaged just over $1 million per store. The second largest category was supplements at $661,000 on average for all stores, followed by the packaged dry goods at $492,000, health and beauty aids and personal care products at $163,000, and non-foods at $89,000. As you might expect, the larger the store, the more sales from all categories. There is one major exception to the rule, and that is, once again, for our 10 to 19% perishables groups in the supplements category. We know these stores are trying to become food-oriented stores by offering something in each of the four main perishables categories: refrigerated, frozen, fresh produce, and prepared foods. But by doing so, they focus less on selling supplements, averaging $460,000 in supplement sales compared to $850,000 in supplement chain stores, and not much more than the non-chain supplements-focused stores at $378,000. Meanwhile, their total perishables food sales at an average of $122,000 are a small fraction of the more than $700,000 in sales of the 20 to 34% perishables group. A final note on the 10 to 19% perishables group stores. They averaged just 2,200 square feet in gross lease area. That's even smaller than the vitamin chain stores, which averaged 2,600 square feet, and less than half the footprint of the 20 to 34% perishables group. They averaged 5,600 square feet. While our hearts go out to these dedicated and hardworking retailers, the survey results make it very clear that in order to be a convincing food store, you've got to have a bigger footprint to capture the imagination and dollars of potential food shoppers.
Were any data collected about stores' expenditures?
Yeah, stores spend about 62% of their sales on inventory. Their wholesale goods average more than $1.6 million. Cost of goods is, of course, the flip side of the coin of gross profits. Here, too, is an almost linear relationship, with supplements-focused stores enjoying cost of goods amounting to under 60% of total sales. Then climbing to 65% is 35 to 54% perishable stores. Once again, the largest perishable stores, 55% plus, are doing a very respectable job of controlling cost of goods, clocking in at 61.4% of sales, which gives them nice flexibility to market aggressively. Inventory turns is a measure of efficiency, how many times a store will completely turn over its entire inventory value. The average was 11.5 turns per year for all stores in our survey. And here again, we can see a direct link between perishables and efficiency. The more the perishable sales, the greater the inventory turns. The exception, once again, is our 10 to 19% group, which turned its inventory just 7 times, fewer than even the more efficient vitamin chains at 8.7 turns.
With labor costs, the evidence is again very clear. The more perishables you sell, the more it costs you to run your store. The smallest supplement-focused stores spend in the range of 11 to 12% of sales for direct store labor, while the 3 largest perishables groups spend 14, 16, and 20% respectively to retain their workforces. Along with more perishables come more employees per 1,000 square feet. While supplement stores can function with about 2 full-time equivalent employees per 1,000 square feet, our 3 largest food-oriented stores need 3, 5, and 7 people per 1,000 square feet, respectively, to run properly. The reason is simple. A high perishable store needs skilled labor in all the most labor-intense departments: fresh produce, deli, meat and seafood, and bakery. I would like to point out that this data on employees per 1,000 square feet is unique to our survey. Nowhere else will you be able to find this type of detailed information on what it takes to actually run a natural products store. And we hope independent retailers listening to this presentation find this information as useful as we think it is.
So to sum up, what are your predictions for 2015?
61% of survey respondents said their sales grew in 2014, and I think that momentum is building. Here's some more good news. 75% of stores told us they are expecting to see a 10% increase in sales this year. So I think 2015 will be a good year for independents.
The natural products industry added a cool $5.05 billion in sales in 2014 and crested the 10% market share threshold of total food store sales for the first time as of 2015 at 10.23%, or $63.05 billion of the $616 billion total food store universe. Leading the way are the supernaturals such as WholeFoods Market and Sprouts Farmers Market, with a 29% market share and $18.4 billion in sales. That group added $2.1 billion in 2014 versus 2013. Significantly further back in the pack, compact grocers, by which we mean stores of 20,000 square feet or less, including stores like Natural Grocers by Vitamin Cottage and Trader Joe's, clocked in at a 16.6% share, or $10.4 billion in sales. This group added $1.07 billion to their coffers in 2014. Stretching their small lead over conventional supermarkets, independent natural products retailers gained $817 million in 2014 for $10.18 billion in sales and a 16.2% market share. This is remarkable because the sector actually lost 44 stores this year. However, average footprints increased from 2,600 square feet last year to 3,200 square feet this year, proving that independents are expanding their stores and remain a dynamic force in the industry. Conventional supermarkets added $357 million in natural and organic sales to tally $9.4 billion, with their share slipping slightly to 14.9%. None of the other 4 retail channels that we track exceeds a 6% share, but each of these club stores, mass merchandisers, pharmacies, and vitamin chain stores gained ground in 2014. Mass merchandisers grew by 11.2%, or $381 million to $3.8 billion in sales. This was driven mainly by Target's expanding its food offerings in its traditional discount stores and adding 147 of these units in 2014. Overall, for the 110,622 retail stores selling natural and organic products in 2014, the average footprint reached 1,036 square feet gross lease area and generated $569,992 in sales for the year. That's about $550 per gross lease area square foot. For your information, there are 114 million total square feet dedicated to natural products in all 8 channels of retail food distribution. That's about 3.8% of the 2.98 billion square feet devoted to total U.S. food retailing.
Thank you so much for listening to our 2014 Retailer Survey podcast analysis. Retailers, this analysis wouldn't be possible without your participation. So watch out for our next survey questionnaire, faxes, and emails in July 2015. We'd love to have your input. Be sure to check out the complete analysis in our December issue at WholeFoodsMagazine.com.